Alright, hi everyone. Welcome for tuning. Pre-analysis brought to you by IC. Skaten. I'll be taking over Desmond today. Feeling a little under the weather, so some last minute changes to today's presenter. Right. So alright, great to see you, Ren. Hi, Philip. Alright, yeah, we'll definitely cover the analysis on the pound dollar as well. For sure, it's one of the majors, so we'll definitely be going through that as well. Alright, so before we start, of course, just want to make sure you guys can see my screen. You should be looking at IC Markets webinar, pre-market live analysis with me, Ketan, and I just want to make sure you guys can hear me loud and clear as well. And do take note, we've of course got the live chat ongoing as well. So do not hesitate to drop any questions or requests that you may have in the live chat box. Alright, so good evening, good afternoon, good morning from whichever time zone you're tuning in. Great to have you back on this pre-market live analysis. Alright, I think we're just, yeah. So of course, as usual, before we start, we'll just go through a disclaimer. Alright, okay. So of course, please take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, do take note of the risk warning that comes with trading Forex and CFDs. They carry a high level of risk to your capital and you should only trade with money you can afford to lose. Alright, simple agenda for today as usual. We'll start off with the key news events, quickly recap a couple of the events that has acted as a strong catalyst for currency markets last week. Then we'll also take a quick overview of what to look out for the rest of the week, and of course we'll dive straight into trading view, and we'll do the analysis on the majors, the commodities as well, and of course look forward to your custom requests. Right, we've already seen one request by Ren on the pound dollar, so for sure we'll be doing that because it's one of the analysis for the majors as well. Alright, okay, so my name is Ketan Ramachandra. I'm an analyst here at Everest Fortune Group. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we've been the finalists for Best FX and Equity Research for the following years, 2019, 2020 and 2021. Right, so as mentioned, last minute changes to the lineup here. Desmond's been under the weather, so I'm taking over him for today's webinar. Alright, I just want to make sure you guys can hear me loud and clear. I'm monitoring the live chat as well. Right, so yeah. So, right, okay, I guess you guys can hear me all loud and clear, right? Alright, okay. So I just monitoring the chat, making sure I can see. Alright, okay. Okay, awesome. Okay, great. Okay, guys. So yeah, we had a couple of key economic events last week. Of course, one of them was US CPI data, consumer price inflation data from the US. We also had unemployment claims as well. So this was out last Thursday. So in general, just to quickly recap what has happened, we've had inflation data coming in a little bit stronger than the forecast, right? As you can see here, this is from Forex Factory. So on a monthly basis, the core CPI or core inflation data increased by 0.3%, which was in line with forecast, so no issues with that. But if you look at the headline CPI reading, both on a monthly and annualized basis, both of the readings came in higher than the forecast, right? You had CPI, headline CPI increasing by 0.4% month over month versus the expected forecast of 0.3%. And you had the annualized version, annualized reading, or the year-over-year reading coming in a little bit hotter than the estimate, right? Coming in at 3.7%. And not only that, at the same time, we also had unemployment claims being released. So the forecast was for 211,000, we had 209,000. So generally, unemployment claims, when you have a figure and it's lower than the estimate, it usually acts as a bullish catalyst for the dollar index. Similarly, inflation data, when it comes in hotter than the forecast, it also has been tended to act as a bullish catalyst for the dollar index. So naturally, if the dollar index is going to go higher, then of course currency pairs like the euro, the pound will fall. Currency pairs like dollar yen, dollar franc will rise, and of course gold prices generally tend to fall as well. Alright, hi Jamilu, good to see you as well. Now that's what happened on Thursday, right? So we had two sets of data, right? Basically higher inflation and lower unemployment claims, which usually function as a bullish catalyst for the dollar index. Right, and then just as you can see here, so for most parts of or rather over the last 12 months, we've seen headline CPI retreat quite sharply, right? I think it peaked at about 7.9% or something like that. I can't remember exactly, falling to as low as 3% back in June. But over July, August, we've seen CPI, headline CPI increase up to 3.7%. And for the latest reading, this was the latest reading for September, also staying at 3.7%, right? So but the main thing is forecast is been coming in higher than the forecast, and also that triggers usually functions as a bullish catalyst for the dollar index and the US dollar, of course. All right, great to see you, Amar. Hey Jay, welcome as well. All right, yep. So over the last 3 months, we've seen headline CPI accelerate. So generally that's not good, of course, because if inflation is starting to come back in, then it's quite likely the Federal Reserve is going to maintain its hawkish outlook and keep rates elevated. So let's see how this plays out for this week as well. All right, and as I also mentioned, unemployment claims are basically a data point that tracks the number of American citizens filing for unemployment benefits. So of course, if you have a figure that is trending lower, or if you have the actual data that's coming in lower than the forecast, right? The blue bars are the actual data, the orange bars here are the forecast. So you can see over the last 8 weeks or so, the actual data has been coming in lower than the forecast, right? So this usually tends to act as a bullish catalyst for the US dollar as well, because of course if you have less people filing for unemployment benefits than the original forecast, this usually functions as a bullish catalyst for the dollar index. All right, then of course on Friday we had the preliminary results from the University of Michigan's consumer sentiment survey. So one of the of course it tracks the overall consumer sentiment in the US as well. So it fell back slightly. This preliminary report showed that consumer sentiment pulled back slightly in October. But however, what's one of the other points I just want to highlight is there's been a substantial increase in concerns over inflation from the survey findings, and year ahead inflation expectations. In other words, inflation expectations rose from 3.2% in September, rising to 3.8% this month. So not only do you have September's inflation data coming in a little bit higher than the forecast, we are also starting to see inflation expectations from consumer sentiment surveys such as this increasing as well. All right, so these are some of the key I would say key economic data points towards the end of last week that's actually functioned as a bullish catalyst for the dollar index. Right, just to quickly look at what's coming up this week. All right, okay, so we've got several things coming up pardon me. We've got inflation data out of New Zealand, right, coming up on Monday, 16 October. All right, just to recap, I'm on GMT time, right? So my time here, this calendar is off Forex Factory, and I use the GMT timing here. So at 9:45 p.m. GMT, we've got inflation data coming out of New Zealand, right? So you can see the previous. This is the quarterly data. So the previous quarter, the reading was 1.1%. This was second quarter of 2023, but the forecast for the third quarter shows inflation creeping up again. So it's quite similar to what we saw in the US as well. So inflation is creeping up, does appear to be creeping up on globally. So this could potentially function as a bullish catalyst for the Kiwi dollar. Right, then of course also on Tuesday 17 October 12:30 a.m. we've got the monetary policy meetings by the RBA. So potentially we could have if these minutes show that the board members had a hawkish outlook with regards to monetary policy, right, this could also act as a bullish catalyst for the Aussie dollar on Tuesday. Then we've got the UK data, UK labor market data coming out. Well, we'll see a combination of claimant count change, average earnings, and of course unemployment rate as well. So this is sort of like equivalent to the US NFP. So do watch out for this as well. This is at 6 a.m. Tuesday, 17 October. Right. They've also got inflation data out of Canada on the same day, 12:30 p.m. US, we've got retail sales as well, and industrial production. And following the release of the minutes later on Tuesday 17 October 10:35 p.m. we've got Reserve Bank of Australia Governor Bullock speaking as well, right? She's the new governor that's just taken over, so this is likely to be, if I'm not mistaken, the first full speech following RBA meetings minutes release. All right, and then of course on Wednesday 18 October we've also got GDP data out of China, industrial production data out of China, right? If we see China's industrial activity picking up, GDP numbers picking up, this could also provide a lift to crude oil prices as well, right? China being the third largest economy in the world, right? If we see strong GDP numbers and industrial production numbers out of China, it's quite likely this would cause crude prices to be lifted as well. And then of course we've got inflation data out of the UK. All right, okay. Okay, with that, let's dive into Forex Factory, and right, okay, let's dive into Forex Factory and start with analysis on the majors before moving on to any other requests that you guys may have. All right, okay, so of course as usual we'll start off with the dollar index. So as you can see here, on Thursday 12th of October and on Friday 13th of October, as I mentioned earlier, we saw economic data coming in the form of CPI data, unemployment claims, and consumer inflation expectations from the University of Michigan's Consumer Sentiment Survey, all three functioning as a bullish catalyst for the US dollar. So of course naturally the dollar index is going to be lifted or boosted by these data points, right? So I'm on GMT time as well, so UTC +0. I'm on GMT time on TradingView as well. All right, hi Jake, hi Marondera, great to see you have joined us as well. So let's just quickly look at on a weekly basis, right? So we've seen, what is 2, 4, 6, 8, 10, 12, 13. So we've had 13 weeks gone by, out of which out of 13 weeks we had 12 strong consecutive weeks of gains for the US dollar, right? Prior to 2 weeks ago we had 10 consecutive gains. 2 weeks ago we saw dollar hit a high of the dollar index hit a high of 107.31 before pulling back quite sharply 2 weeks ago. But then last week, initially the pullback in the dollar index continued, but however towards the end of the week we had a strong bounce for the dollar index, right? So now back to the daily time frame. So you can see since Wednesday 4th October the dollar was pulling back quite strongly, and then last week as well dollar opened strongly on Monday, due to geopolitical risks over that weekend, right? So in terms of geopolitical risks, usually that triggers a demand for safe haven assets. So what are the safe haven assets? The US dollar is one of them, so is gold, right? So on Monday we saw gold prices spike higher, we saw demand for the US dollar pick up as well, and we also saw crude oil prices spike higher as well, right? So that's what happened last week. And but of course after that, for the first half of last week, the dollar index started to pull back, but then it found strong support at about 105.63 before bouncing higher. Remember, on Thursday and 12th and Friday 13th of October, we saw strong economic data out of the US, which pushed the dollar index higher to end the week on a strong note. All right, hi Nick, good to see you. Right, it is live, Nick. We are live. All right, pre-market analysis is always live here. It is not a recording. Glad you could have joined us. All right, okay. So if we look at the dollar index, right, we've had 12 strong weeks of gains out of the last 13 weeks. We had a strong end to last week's strong finish to last week as well. Thursday, Friday, dollar index bouncing strongly. All right, so where are the current support and resistance levels, right? All right, so as you can guys see here, we've got a Fibonacci retracement. When do we draw this retracement? Of course, we started from this swing low here, right, on 14th of July and ending with the swing high on 3rd of October, right? So if you look at where all the fib levels are, we can see that 23 and 38.2% line up with the overlap levels that we have identified as well, right? We can see, right, why are these overlap levels significant, right? Okay, we'll start off with the second support first. All right, we can see price making a very strong significant swing high here, right? Price running into dollar index rising strongly from 101.10 roughly, right? 101.10, 101.20, rising strongly in second half of May. But once it hit 104.38, it ran into strong resistance. So we see price making a strong resistance here, swing high resistance, which then price ran into resistance again on 28 October. So once price breaks above this level, this what was previously a strong pullback resistance level is now going to act as a support level, which it did. So you can see price bouncing off this level here at 104.38 on 8th of September to go higher. So now we have a nice overlap, right? We can see price running into resistance here in early June, running into resistance once more in the end of August, and then finding support here in mid-September before bouncing higher. So we can see multiple instances where price has reacted off this level at 104.38. That is why we've identified this level as a key overlap support level, which also aligns very well with the 38.2% Fibonacci retracement. So that's how we've identified the second support. All right, then of course, looking at where the first support, similarly, once again, we see price making a pretty significant running the resistance here on 6th of Jan, and of course making this very significant swing high here on 8th of March. So we see a couple of times where price ran into resistance, failed to break above this level, but when it finally did on 26th of September, right, so this was a previously acting as a strong pullback resistance or multi-swing high resistance. And then once price finally broke above it, it found support not once but twice, right? You can see it found support on 29th of September before bouncing higher. Then of course towards the end of last week, it found support again. So once again, a very strong and significant overlap support level at 105.63 that we've identified now as the first overlap support that also aligns very well with the 23.6% Fibonacci retracement. All right, so that's how we've identified the first and second support levels for the dollar index. Right, similarly, of course, we see price making the swing high here on 3rd of October, 3rd, 4th of October, right? So naturally, the first resistance is at 107.31, right, which took place on 3rd and 4th of October with the swing high resistance here. And if we zoom out a little bit to identify the second resistance at 107.92, right, we can see back in September of 2022, we see price making a pretty significant swing low here, right? Price bouncing very strongly off this level to form a pullback support. You can even argue here that price bounced off this level here back on 26th of August as well, right? And then as price pulled back, you can see it did find support here briefly on 10th of November, but however, it broke through this level. So what was previously acting as a support level here then started to act as resistance. You can see here price running into resistance here on 21st of November of last year. So this level at 107.92 is now functioning as a key overlap resistance or significant overlap resistance. So that's how we've identified the resistance levels and support levels for the dollar index on the daily time frame, right? So of course, with strong economic data coming out on Thursday and Friday, and also with potential geopolitical risks going on in the Middle East, it could spark another round of safe haven demand for safe haven assets such as the US dollar and gold, right? So we may see the dollar is quite likely to see, especially after the strong economic data out of the US last week, Thursday and Friday. We're quite likely to see the dollar index make a push towards 107 once again this week, right? So quite likely the bias for the dollar index is to the upside as we open later today, right? Going up, pushing up towards 107. All right. What else is there? Anything else that we can highlight? No. All right. Okay. So usually, right, since we're on the dollar index, usually when you see the dollar rising very strongly, then naturally, of course, the dollar index is gaining as well. This generally tends to cause gold prices to fall, right? So for most parts since mid-July, that's what we saw. Gold prices were pulling back since mid-July, but with the ongoing geopolitical risks stemming out of the Middle East, we've also seen demand for gold prices pick up. So what we're actually seeing the negative correlation between dollar index and gold prices break down, and we're actually starting to see positive correlation. So positive correlation simply means we have a case where when the value of the dollar index rise, gold prices also rise as well, right? So that's, if you look here, if we switch to gold quickly, right, as we mentioned, since mid-July, right, gold prices have been trending lower and generally, but of course there's been retracements to the upside as well, but gold prices have been trending lower as far back as the 8th of May. But as you've seen since last week, Monday, right, Monday markets open 9 October. Since then, gold has opened very strongly to break through a few key resistance levels, right? So once again, would just like to highlight the breakdown in negative correlation between the dollar index and gold prices, which is now we are seeing starting to see positive correlation between gold and the US dollar, primarily caused by the demand for safe haven assets, which are typically gold and US dollar as well. So it's not something that you see quite often. All right, hi Nick. Yes, that is also the Japanese yen and Swiss franc are considered safe haven currencies as well. Generally, you will see stronger flows into those two currencies as well, but we'll go into that as well once we cover dollar yen. But there's flows into the US dollar and gold prices seem to be higher than the flows into rather than the flows into Japanese yen so far, right? Yeah, that's right, Jake, Nick and Jake, you're both spot on. The Japanese yen and Swiss franc are safe haven currencies as well. That's right. So we'll look at that, how that has played out into those currency pairs as we do the analysis. So since we're on gold, let's just quickly cover the resistance levels for gold. Okay, we'll start off with the second support. Right, so naturally we see price making finding a double bottom here back in February, 24th of Feb, and then 9th of March before prices bounce strongly higher. So this is a strong pullback support level for gold at 1808, and right on 6th of October as well, we can see that price once again finding support and bouncing quite strongly off this level, right? So we've seen 3 times where price has bounced off this level pretty strongly, so highlighting its significance as a key pullback support level at 1808. Right, first support was the first support was previously a major resistance level, right? You can see previously back in 30th of June, price bouncing off this level here, making a significant swing low, making another significant swing low here on 16th of August, right? So this level here at 1889 was previously acting as a support level, which broke through quite easily on 27th of September, but after which this level would then function as a resistance level, which we did see on 12th of October, price coming very close up to 1889 before pulling away from this level, but eventually it did break above 1889, the key resistance level, on 13th of October. So now this, what was previously resistance, is going to act as a strong pullback support level for gold at 1889. We also see what was previously a bearish channel, right, for gold, which has now broken above it, right? It's broken above the upper trend line of the bearish channel, potentially signaling a strong bullish move up towards 1946, right? 1946. Why is this a strong resistance level, right? We can see price making a very significant swing high here back on 26th of Jan as well as 2nd of Feb, right? Making a very strong swing high over here, price running the resistance. Then once price broke above 1946, it found support several times, right? On 22nd of March as well as towards the end of May, early June. And then once it broke under this level then proceeded to function as a resistance, right? We can see price running into resistance here on 1st September and again on 20th of September. So this is a very key or significant overlap level. But given the strong demand for gold recently, if we do see a break above 1946, this is going to give us upside confirmation for gold prices to rise towards the first resistance, right? You guys can see, right? We've already seen last week price breaking above the upper trend line of the bullish of the bearish channel previously, right? It's a bearish channel for gold, so price already breaking above the upper trend line last week, and it's quite likely we're going to see gold prices push up towards 1946 again. And if this level does get does not hold, right, if then it's quite likely this will give us upside confirmation for gold prices to rise up towards 1982. So these are the key levels for gold. All right, so second support down at 1808, first support at 1889, upside confirmation at 1946, which is actually a key significant overlap resistance level. So if price does break through this level, then we're definitely going to see a very high probability of gold to rise up towards close towards 1980 at the very least, which is also another significant overlap resistance, right? We see price bouncing off this level here on 27th of April, and once it broke underneath it, finding resistance here on 5th of June as well as in mid-July, right? So you can see multiple instances where price has reacted off this level. So that's how we've identified first resistance at 1982. All right, so let's now so I just wanted to highlight the current positive correlation between the dollar index and gold prices. All right, now let's quickly go on to the euro. Right, so of course, if the dollar index has been rising strongly since mid-July, then of course the euro, currencies like the euro and the pound, would be falling. So you can see the euro continues to trade in this bearish channel here, right? We see this bearish channel here that's been going on since 18th of July. It has tested the upper trend line of this channel a couple of times back in to the end of August and as recently as last week as well. But we've seen price continue to respect the bearish channel. So let's look at where the resistance levels are. All right, we can also see price making previously back in end of May, price making a very significant swing bounce here, finding strong support here at 1.0640. Right, so this is was acting as a very strong support level, and then it did find support here on mid-September, right? Price retracing a little bit higher, but of course, because given the strength of the dollar over the recent weeks, the euro broke through this level support previously, strong pullback support level, which is now going to act as a strong overlap support, right? Overlap resistance. So we can see price running into resistance here on 12th of October. So first resistance at 1.0641 is a strong overlap resistance, and not only that, we also have a Fibonacci retracement acting as a supporting additional factor contributing to the significance of this level. So this Fibonacci retracement, right? Where did we draw this retracement from? We drew it from this swing high here on 18th of July, going down to the swing low on 3rd of October, right? So that's how we drew this Fibonacci retracement, and we can see that 23.6% lines up very well with the overlap resistance at 1.0641. Now, similarly for the second resistance at 1.0762, we see price making a pretty decent swing low here back on 25th of August, right? And then after which, when price broke underneath it, finding resistance again on 14th September as well. So once again, we see pretty strong overlap level at 1.0762, which is now functioning as the second resistance, which also once again aligns very well with a 38.2% Fibonacci retracement. All right, thanks, Ren. Yep, we do try and I guess employ a follow similar style when we're doing the analysis, right? So it's consistent for all viewers, right, all the time, right? So it's just good to have. It's just good that we are all on the same page as well, so it's easier for you to understand the analysis as well. All right, so that's how we've identified the first and second resistance levels for the euro. Now to the downside, right, we see price, of course, middle of last week, price bouncing quite strongly off 1.0444, right? We see price making a pretty significant swing bounce here. Similarly, we can see price making another significant swing bounce back in December of 2022. So that's how we've identified the first support at 1.0443. And not only that, we've also used a Fibonacci extension. So what are Fibonacci extension levels? They are just simply Fibonacci levels that are greater than 100%. So any level that's greater than 100%, they are going to be called Fibonacci extension levels, and the key extension levels are at 127% and 161%. Right, so to get these extension levels, we drew this retracement here. We started this retracement from the swing low here on 31st of May, and we ended with the swing high here on 18th of July. So not only do we have a strong pullback level at 1.0443, it also aligns very well with the 127% Fibonacci extension level, right? So we had another supporting factor to this pullback support level, and we clearly saw that playing out last week. Similarly, for the second support at 1.0239, we did see price making a pretty significant key swing bounce here, right? Back on November of 2022, price bouncing strongly off this level back in November of last year at 1.0239. And not only that, we do see this level aligned with the 161% Fibonacci extension level as well. Okay, let me just adjust the labeling of this the level, so it's probably perhaps a bit more clearer. Yes, okay, right. So we see how we've used the extension levels to act as a supporting factor in identifying the support levels. All right, so expected with dollar index expected to open strongly this week, right? We are going to see, quite likely going to see the euro fall as well. So right, the euro already peaked at 1.0641 last week on Thursday and started to pull back quite sharply from this level. So it's quite likely we're going to see this downward move or the downtrend continue towards the first support at 1.0443, right? As I've also mentioned as well, price is respecting the bearish channel as well, right? Price coming close to the upper trend line back at the end of August, and of course in the middle of last week as well. So it's quite likely we're going to see the euro fall lower towards the first support at 1.0443 again. All right, so that's the euro. Now let's go on to the pound. Right, so of course similarly we're going to see similar price action for the pound as well when we compare it to the euro, right? Okay, first of all, we can see there's not a clear bearish channel for the pound, so that's why we've not drawn the bearish channel, but we actually do see a very strong case for a descending trend line, right? We can see price coming close to this trend line on 27 July, and of course pushing against this trend line on 22nd August, 31st of August, and of course middle of last week as well. So we see multiple times where price has tested this descending trend line but has failed to break above it thus far. So right, so we have a very strong resistance zone, right, the intersection between the descending trend line and this overlap level at 1.2297, right? So why is this a key overlap level? Right, of course, we see price making a very significant swing bounce here on 25th of May, right? The pound bouncing strongly off 1.2297 to go higher. As the pound was falling, it didn't provide much significant support, right? I mean, you can see on 21st and 22nd of September, price actually just broke through it very easily. It didn't really afford that much of a support on the way down, but it did function as a major resistance level, right? So 1.2297 is a key overlap resistance for the pound, which also aligns very well with the 23.6% Fibonacci retracement, right? So this retracement level here was drawn from this swing high here on 14th of July, right, coming down to this swing low here on 4th of October. Right, so we can also see that we have the secondary additional factor of the 23.6% Fibonacci retracement contributing to the significance of this overlap resistance at 1.2297. So do take note, there is a strong intersection of the descending trend line as well as the overlap resistance at 1.2297 plus the 23.6% Fibonacci retracement. Similarly, for the second resistance as well, right, previously this level acted as a strong support level with the pound bouncing off 25.89 very strongly, right, making a very strong swing bounce here back at the end of June. Then we can argue, right, on 3rd of August as well as 14th August, price finding support above this level, then of course finding strong support here on 25th of August, but eventually it broke through, right? So you can see multiple instances where price has found support of this find support at this level, which is now going to function as a strong resistance level, right? So that's how we've identified the second resistance for the pound at 1.2589, and we also have the contributing factor by the 38.2% Fibonacci retracement as well. All right, so these are the levels for pound. So similarly, of course, we expect pound to slide lower as well, testing the first support at 1.2064 today as markets open, right? So it's quite likely we could see demand for the dollar continue continue strongly this week, and we will likely to see currencies like the euro and the pound fall further. All right, now we'll look at yen, right? Okay, as we mentioned, right, as a couple of you, right, Nick and Jake, right, you guys have also mentioned that the Japanese yen is considered a safe haven currency as well, but you can see that it's not pulled back as sharply as well. You can see that because given the strength of the dollar is much higher relative to the demand for the Japanese yen, so you can see actually dollar yen has been trending higher. So this is also partly due to the fact that the Bank of Japan continues to maintain its ultra dovish monetary policies, right? Do take note, Japan is still the only central bank that's kept its policy rate at negative 0.1% throughout this high inflationary period. And when you have on the opposite side the Federal Reserve maintaining a hawkish outlook, it creates a monetary policy divergence between two central banks. So in this case, dollar yen is likely to push higher, right? So yes, we have seen the dollar yen pull back sharply as well. Of course, we saw that on Tuesday, 3rd October. I believe this was this sharp pullback on 3rd of October, I remember now, was due to a possible rumor of a BOJ intervention in currency markets. So what is a BOJ intervention? Intervention is when the central bank, in this case the Bank of Japan intervened in the open market by selling US dollars and buying the yen. So the last time the Bank of Japan embarked on an intervention action was back in October, November of last year. So during this period here, this is the primary reason for dollar yen pulling back over the last 3 months, right? The last quarter of 2022, because the Bank of Japan intervened in the open market, right? They were selling US dollars, selling US treasuries, and using the proceeds from that sale to buy back the Japanese yen in the open market to to push up the value of the yen, right? So because when the Japanese yen, when you see dollar yen rising very strongly like this, hitting a high of 152, right? This means the Japanese yen is getting devalued very strongly, and that's not usually good for any country when their currency gets devalued. So in a bid to stem the devaluation of the Japanese yen, the Bank of Japan had to intervene in the open currency markets, which is what they did in the last quarter of 2022. So they sold US dollars aggressively, they sold US treasuries as well, and the proceeds from those sales was used to buy back the Japanese yen in the open market. So this is why we saw dollar yen pull back quite sharply over the last quarter, but then they stopped intervening in the open market towards the end of January of this year. So this is when the intervention stopped, and this is when you see dollar yen starting to rise again, because as I mentioned, of the monetary policy divergence between the Federal Reserve and the Bank of Japan causes dollar yen, causes much more stronger demand for the dollar yen or for the US dollar, while Japanese yen gets sold off. So this is why we've seen dollar yen continue to rise strongly. And of course, unfortunately, we've had the events going on in the Middle East. So let's see, that took place over the first Monday, right? Yes, you can see there was some demand for the Japanese yen, but overall you can see that the flows for the US dollar and the flows into gold prices are stronger versus the Japanese yen. All right, so just take note of that, because of the ongoing ultra dovish monetary policy by the Bank of Japan. The case for it to act as a safe haven currency is diminished somewhat because of this ultra dovish monetary policy stand. That goes to say that it's not that we will see dollar yen pull back. We could see dollar yen pull back quite strongly, yes, based on news such as potential intervention measures, but some of these moves could be short-lived because, as I mentioned, of the policy divergence between the two central banks. All right, okay, with that said, let's quickly look at where the key analysis, key support levels are for dollar yen, right? If we can see, since January of this year, dollar yen has been trading in this bullish channel, bouncing several times off the lower trend line and the upper trend line as well, and is pushing towards last week's high of 150.16. So last week's swing high or pullback resistance here at 150.16 has been identified as the intermediate resistance. So if this level does get broken through, then it's quite likely we can see the dollar yen push higher towards 151 at the very least, right? Okay, and of course the first major resistance is at 151.90, which is this swing high here, this major swing high here that took place in October of last year, right? We've identified this overlap level here, 148.02, as a downside confirmation. Why is that? Okay, first of all, this level here, we can see price running into a little bit of resistance here back on 6th of September. Then once it broke above it, you can see here it found a little bit of support here on 22nd September, and of course it found support here on 3rd of October as well. So this is a pretty decent overlap level at 148.02. However, if price were to pull back for the dollar yen and it does break underneath 148 convincingly, then of course it's going to trigger a downside confirmation move to the first support level, right? So this is what we mean by downside confirmation. So if dollar yen pulls back and we do see it, and if it does break below this level convincingly, there's a strong case for dollar yen to fall towards the first support level at 144.93, which is also where the lower trend line of the bullish channel intersects, right? As I mentioned earlier, we've seen several times where price has bounced off the bullish lower trend line of the bullish channel. It happened in 24th of March, 6th April, as well as on 13th of July, then again on 28th of July, right? So we have seen strong pullbacks in dollar yen. That is why we've labeled this level as a downside confirmation level. So if that were to happen again, it's quite likely we could see the dollar yen pull back towards this intersection level to find support again, right? So that's downside confirmation level, first resistance, intermediate resistance, first support. Okay, right, if we zoom out a little bit, we can see price running into resistance here back in September of and early October of last year, right? Then once price broke above it, you can argue that it found a little bit of support here on 26th of October before price finally broke below it. So what was previously support level is now going to act as resistance, which it did, right? Back in 30th of June, price ran into strong resistance here, but of course eventually it broke above this level, and then you could see it found support here 3 times before going higher, right? So this tells us this is a very significant overlap level at 144.93. That is why we've identified it as the first support. And not only that, we've also used the Fibonacci retracement level, right? So we've used this retracement level starting from this swing low 14th of July going up to the swing high here on 3rd of October, right? We can see that the 38% here aligns very well with the overlap as well, right? Not only that, we've also used another Fibonacci retracement, right? Starting from this swing low here, right? We started from this swing low here on 16th of Jan, and of course ending with a swing high on 3rd of October. We see the 23.6% Fibonacci retracement level line up very well with the first support at 144.93. So we have two retracement levels, right? We've got the 23 and 38.2% Fibonacci retracement level at the same price point, right? Or at a similar price point. So this gives us a Fibonacci confluence. So what do we mean by Fibonacci confluence? Fibonacci confluence means there's more than one Fibonacci level at that particular price point. So this gives us additional supporting arguments to the significance of the first support. Similarly, we've also seen the 38.2% here, where you can see price running into resistance around the 38.2% and finding support here. So potentially the next support level for dollar yen, if it were to break through underneath the lower trend line of the bullish channel, could potentially be where the 38.2% Fibonacci retracement level lies, which is at about 141.40, right? So these are the levels for dollar yen, right? Let's quickly look at Swiss franc, right? We can see Swiss franc actually pulling back much more sharply than the dollar yen, right? So you can see here the demand for the Swiss franc, right, acting as a safe demand has actually been more, right? So we see more demand for the Swiss franc rather than the Japanese yen, which is why we've seen dollar franc pull back quite sharply for most parts of last week, right? So let's see. All right, okay, so if you look at the last 2 days of last week, right, Thursday and Friday, 12th and 13th of September, price action was bounded between 89.89 and 90.89. Now, why have we identified these levels as upside and downside confirmation? Because, right, you can see, you could say over the last 2 trading days, dollar franc has been in a limbo somewhat, has been ranging between these two levels. So we've labeled 89 as a downside confirmation, right? So with price pulling back, if we do see price breaking underneath this ascending trend line and the overlap level here at 89.89, it could trigger a further downward move towards 89, right? So we see price finding support here on 8th of June, then once price broke underneath it, running into resistance here, and then of course finding support again. So we do see 89 is a strong overlap level, a significant overlap level. And not only that, we can also see that it also aligns well with the 38.2% Fibonacci retracement, right? So this retracement level started from this swing low 27th of July and ending with the swing high on 3rd of October. So we can see that 38.2% aligns very well with the overlap level, functioning as an additional factor to the significance of this overlap level. So we have a strong intersection here, right, between the ascending trend line, the overlap support level, and the 38.2% Fibonacci retracement. So if this level does get taken out, it would give us downside confirmation for dollar franc to drop lower towards 89 at the very least, before hitting first support at 88.27. Right, 88.27 is also a key support level, because we can see price making a pretty significant swing bounce off this level here on 4th of May. And of course, we also see price running into a little bit of resistance here in end of August, early September, which tells us this is also a pretty significant overlap level. And also we have the 61.8% Fibonacci retracement lining up very well with this level, right? Okay, to the upside, similarly, there is a potential for dollar franc, to break above 90.89, right? So if price, because we've seen that this intersection here is a strong support, so if price does bounce off this support, right, what we are looking for is then would be looking for an upside confirmation. So if price breaks above 90.90 convincingly, then we could see it rise higher, at least towards break above 91, right? So the upside confirmation, if we zoom out a little bit, is a very significant level as well. So if we zoom out, we can see going back as far as October of 2021, right? We can see price bouncing off this level several times here. Then also as well, we see it bouncing off this level earlier this year, 9 Jan, right, and then 31st of Jan, then once again on 13th of March, right? So we see multiple instances where price has bounced off this level, right? So this was previously a strong pullback support level, and then which then proceeded to act as a strong resistance level here in middle of June. So it's we have a very good case for a very significant overlap level here. That is why we've identified this overlap resistance level as the first resistance, but in this case it's labeled as upside confirmation. So we're actually seeing very strong resistance levels here as well as support levels. So it's yeah, for dollar franc it's a little bit more difficult to see where it's going to which direction is going to break out into, but that's why we have the downside and upside confirmation levels to give us that better clarity on the potential direction. All right, okay, then we'll do oil as well, and then I'll try and cover the Aussie and Kiwi. All right, guys, if you have any requests for any currency pairs or indices or the commodities, now's a good time to let me know as well. So we have time to actually go through the analysis together, and we don't have to rush through it as well. All right, okay, so let's quickly cover oil. Right, so of course, last week with the ongoing tensions in the Middle East, we saw crude oil prices spike higher, right? Crude oil prices spiked, gapped open 3% last Monday, right, with WTI opening at about 83.50 and growing as high as $86 before pulling back sharply. We can argue that the gap has been closed, right? Let's see, on 6th of October, right, 6th of October, price closed, 6th of October, price closed at 81.62, and then we did see price dropping, touching this level at 81.62 on 12th of October as well. So we can see that at least on a technical basis, this gap has been closed, and price has bounced off this level strongly, right, due to the ongoing tensions in the Middle East, right? Okay, so what about the support levels, right? So we can see if we zoom out a little bit, $82.65 per barrel is a strong support level for WTI oil, right? Price making a strong bounce here on 24th of October last year. Then of course running into resistance multiple times, 2nd of December, 20th of Jan, even here after the this gap here in mid-April as well. And of course you can argue here as well, price ran into resistance here on 9 August. So we see multiple times where price has reacted off this level and it has found support close to this level once again, not exactly, but close to this level again, right? We also have used the Fibonacci retracement, right? You can see that this retracement here, we started from this swing low here on 28th of June and of course going up to the swing high here on 28th of September. We also see the 50% Fibonacci retracement level lined up quite well with where this pullback support took place on 6th of October. And we also see the 61% Fibonacci retracement lined up very well with this overlap level here at 77.42. So once again, we see price running into resistance at 77.42. Then once it broke above it, finding nice support here on 25th of August. So creating a significant overlap level, which we can use to identify as the second support. And also we have another factor contributing to the significance of this level, which is the 61.8% Fibonacci retracement level. Right, so these are the support levels for WTI oil, and it's quite likely we can see WTI oil pushing towards the first resistance today as well, or as markets open this week, right? So first resistance lines up with this pullback level here, right? Price finding support above this level on 21st of September as well as 26th of September. So this is potentially going to act as a resistance level. We've also used the Fibonacci retracement, right? So this retracement started from this swing high here on 28th of September, of course going down to the swing low here on 6th of October. We can see that the 50% retracement level lines up quite close to the pullback level here. So this is a potential resistance for WTI oil this week. And higher up, of course, after making the swing high here at the end of September, this price level at 92.59 is a very significant resistance levels, right? We can see price making a multi-swing high here on 7th of October and then again on 8th of November, right? Multi-swing high resistance here towards the end of last year. And if we zoom out a little bit, we can also see price bouncing strongly off this level 17th of March 2022 and then again on 11 April 2022. So right, we can see multiple instances where price has reacted off this level, telling us that this is indeed a significant overlap level, which is why we've identified it as the second resistance. Alright, so do take note, these are the key resistance and support levels for WTI oil, and with demand for oil picking up again, or rather with tensions rising in the Middle East as well, we could see crude prices continuing to stay elevated this week. All right, okay, there's a request for dollar and Mexican peso. All right, at least this is the first time for me. All right, so let's take a quick look. This is going to be interesting. I've never looked at dollar peso. Let's see, right? Yeah, so here we go. Let's just quickly look. Alright, okay, we'll just use the first one that comes out, dollar peso here. Alright, okay, this is going to be an interesting pair for me. Alright, let's do this. I've never traded the dollar peso, and I've never looked at it as well at all. Alright, okay, so this is going to be interesting experiment, I guess. Alright, okay, so we'll round off with the analysis for dollar peso. So let's just zoom out a little bit. I just like to get some perspective to see how a currency pair is trading on a slightly higher time frame, so that we know what's been going on. All right, so pretty much since July of 2022, dollar peso has been in a strong downtrend, right? But then price bottom here in August of this year before going higher, right? So we can also see, I guess, what was a pretty decent descending trend line, right, on a weekly basis. So we've had a breakout, right? We can see price clearly breaking out of this descending trend line here back in last week, Monday, right? Price breaking higher, so it gives this is like a bullish confirmation for price, signaling a reversal of the bearish downturn, right? And we also see, of course, a strong support here at 1668, right? This is one of the strong support levels for the dollar peso. We can also do a Fibonacci retracement here. Okay, let's just maybe go in onto the daily time frame now and see what we can do, right? Yeah, so even on the daily time frame as well, right, we can see that this descending trend line was broken quite clearly last week, right, on 3rd of October. And of course price finding support here as well. Okay, let's do a Fibonacci retracement starting from this swing high down to the swing low here. You can see the trend line capturing the market structure very well, so that's good. What we want to see whenever we draw Fibonacci retracements, right, we would like to see the trend line here, which is the blue dotted line, capture the market structure, the price structure very well, as closely as possible. So that usually tells us we have drawn the Fibonacci retracement in the correct manner, or we've identified the correct starting and ending points. Okay, so 23% price ran into a little bit of resistance on 7 September, 23%, but of course, and then again on 28 September, but then of course price broke above it, where it found some resistance again was at 38.2%, right? So we can see that naturally that the first resistance for dollar peso is at 1831, which is also aligns very well with the first resistance level. And if I were to go back as far as 17 September, we can see price finding support here towards the end of February, and then running into a little bit of resistance on 6 April. So we can see that this level here at 1830 is a significant overlap level, which aligns very well with the 38.2% Fibonacci retracement. Similarly, where the 50% retracement level lies, we do see dollar peso running into resistance around this level as well, right? So that's, we can see where the second resistance is. Second resistance would be around 1897, with price making this swing high here in middle of March, right? To the downside, we do see a pretty decent overlap level here, so I would use this price level at 1781 to identify my first support. Let's zoom in a little bit here, and also let's just tidy up the retracements. We'll use 38 and 50. Right, so when price broke above the descending trend line here, it ran into a little bit of resistance at 1780 on 27th of September. Then once price broke above it, you can argue as well it found support here on the 4th of October, as well as last week on 12th of October. So we do see a pretty decent case for an overlap, significant overlap level here at 1781. So that's why I would identify this as the first support level. Second support would be, probably I would just use this pullback level here on 2nd of October. Right, and I think we can probably do a Fibonacci retracement. Perhaps, let's see. From here, right, from this swing low. Alright, probably not the best, but you can see that the trend line has captured the market structure somewhat. It's not the best, but yeah, I think we would see 38 and 61 here. Right, okay, so we do have the 38 and 61% Fibonacci retracement levels contributing to the significance of the first and second support levels. Alright, highs up. Alright, okay, right, since we're coming to the end, I'm just going to recap as well. Right, okay, the ongoing geopolitical risks have triggered a demand for safe haven assets. So what are the safe haven assets? They're the US dollar, gold, and in some parts Japanese yen and the Swiss franc. But we are seeing stronger flows into the US dollar, stronger flows into gold, and stronger flows into Swiss franc. So I'll just quickly recap. We'll end the session by quickly looking at gold and dollar franc and dollar index. All right, okay, so as we mentioned, demand for safe haven assets. So we've seen gold prices rise strongly, so it's quite likely we're going to see gold continuing to rise towards the upside confirmation at 1946, which is a major resistance level. So if this level does get taken out, then of course we are likely to see gold prices rise towards 1980. Similarly, for dollar franc, right, we've seen stronger flows into the Swiss franc versus the Japanese yen. So we could see dollar franc continue to weaken further, but once again, do take note of the downside and upside confirmation levels as well. That would trigger the move to the either side. Japanese yen also usually functions as safe haven currencies, but because of the ongoing central bank monetary policy divergence, right? The Fed is still maintaining a very hawkish outlook, while the Bank of Japan maintains its policy rate at negative 0.1%. So because of this divergence in monetary policy, the case for dollar yen to go higher is stronger, and that also diminishes the effect of the safe haven currency flows into the Japanese yen. And of course, we'll end off with the dollar index. So we've had a combination of stronger inflation data out of the US last week, Thursday and Friday, stronger CPI data, weaker unemployment claims. Both of these function as a bullish catalyst for the dollar index. We also have seen on Friday inflation expectations coming in higher, so all this function as a bullish catalyst for the dollar index. And of course, we are seeing the demand for safe haven assets as well, caused by the ongoing tensions in the Middle East, which also triggers triggers a flow into the US dollar because it is also a safe haven asset. All right, so these are the current levels for today, right? Yeah, that's right, John. Yes, you've summarized it very well. As well for dollar franc. Yep, it's pretty much in limbo, I would say, for now. Quite hard to trade that one. That's why we've got the downside and upside confirmation level to give us a better indication on the eventual direction for that pair. All right, thanks everyone for tuning in today. Do take note that this recording will be uploaded, of course, onto the YouTube page for IC Markets as well, right? And yeah, have a great trading week. Do look out for the upcoming events that are coming up this week as well. And we'll just end off with the sorry, pardon me. I do take note of the key events that are coming up this week, right? And we'll end off with the disclaimer. All right, so ending disclaimers. Of course, do take note of the risk warning. It comes with trading Forex and CFDs. They carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Alright, trading Forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risk involved and seek independent advice if necessary. Alright, wish all of you a great trading week. Do take note of the key economic events that are coming out this week, and also do take note of the key levels that we had identified today as well. Alright, thanks everyone for tuning in. Wish you all the best in your trading journey this week, and I'll see you at upcoming webinars by IC Markets this week as well. Alright, thanks everyone, and have a great trading week. Thank you.